The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And, well, it is certainly a exciting first few days of the year. And looking through some of the news reports out here, I guess they're saying at least in the S&P, which was, 1953? That they haven't had the first 3 days all down days. And, of course, even for the magnitude of the move down, they haven't ever been this strong. I'm going to have to try to find my newsletters from last month where I was thinking that we were going to probably come up and I wanted to go short the last couple of days of the year. Well, we did that in the daily and in the longer edition of the Tech Insider. Started getting short, maybe a little early on one, probably about perfect on another, and maybe a tad a little late on another one for the longer term ones, but close enough for government work. Pretty much nailed a trade on the VIX, and we'll get into that in a few minutes. And I've got a little bit of started to cover first couple of positions today, and we'll get into why I wanted to do that. But it's let's get back here to the stuff that I look at. I don't know why that must have clicked on something wrong. Anyway, we're printing out at 2001.58. About 2.7 billion shares, billions and billions and billions, 2.7 billion shares, which is pretty good for the start of the day. For the movement we had, though, I think we probably should have had a little bit more volume. Now, we got a few things coming on. That is, tomorrow will be our first read on what the option market makers think is going to happen a week from Friday, and I think that's going to be extremely telling. It is Weird Wally Wednesday, named after Don Wallenchuk, who is the first guy that really started talking about it, but probably in at least a retail investment crowd. It's been known for a while, or a while before he started talking about it. But it is when option market makers, who tend to be the best traders on Wall Street, figure out what they want to do and try to go delta neutral. Imagine a arms dealer who does not, who's been backing one side of a country, one country in a war, but it gets to the point where he's not actually sure which country's going to win, so he basically makes sure that they're kind of equally matched, and hopefully he'll sell a lot more guns and death before the end of the war. And that's kind of what these guys are going to do. They're going to, if they've got put positions or call positions, they'll take the other side of that with the equity, or they'll buy some synthetic way of hedging their bets so that any huge move the last few days won't wipe them out. And at that point, you get a pretty good idea. Now, why are they so good? Are they clairvoyant? Well, not so much. They are pretty good traders. But the other thing is that many of these option market makers are controlled by the biggest banks on Wall Street. If you've got basically an unlimited fund to dip in for, let's say, like your Goldman Sachs or Morgan Stanley or any of those guys, or even some of the other ones, you probably have some pretty deep pockets, and maybe a bank, even if you're not one of the bigger names or the biggest names. If you're a bigger name, you probably have a bank that is more than willing to lend you some money on margin. And you're probably margined out probably 30 to 1 or something like that already. But the idea is you'll probably go ahead and you'll sell arms to both sides. In this case, of course, what I'm saying is that you're either buying puts or calls on the opposite side to limit your exposure in the last seven trading days. Actually, it's the Wednesday, the week before big options expiration. One of the things I don't like about weekly calls and puts is because they can't do that and there isn't a lot of time delay in it, the options are much more expensive when you get down into the last week. Of course, I like to play I think we played it very well in, was it September, October, and we played it very well in December again, and that was to play a little white lightning the last few days of option expiration where we found people that were way on the wrong side. I don't know if we're going to get that this month, and normally you get that 2-3 times a year where there'll be big outliers for the people that have options. And if you can find the stock on the right side and everything lines up and the planets are all aligned, you can make some wickedly fast money. We did, 3 times last year, which is pretty good. Normally you'll get 3 times, maybe 2 out of the 3 times you'll be right. I think we were pretty much right most of the time when we called the big moves. So it had been pretty nice. But it is interesting. Somebody in the den saying, $1 trillion capital always helps. And like the one senator said, $1 billion here and $1 billion there. Soon we're talking real money. But just a little bit to know that we've got that coming in. I thought we'd make at least some temporary low in here for the next few days, or for fairly close. I was looking at 1996. We got to 1992 today. Now, could this market really blow up? I think it could, but since I have been talking about what I was going to do for probably since Thanksgiving, that I was going to short the daylights out of this market, you can pretty much imagine that I was pretty much short to the hilt personally. I picked the best products I could for my both daily newsletter and the longer-term newsletter. The longer term is going to take a little bit longer to pay off as some of the short-term trades out there. But I'll get into that in a minute. On this day in 1981, market guru at the time, Joe Granville, issues a client advisory, sell everything. He brags that he deserves the Nobel Prize in economics for solving the mystery of the stock market. The next day, the Dow Jones average plummets 4.2%, and then the record volume of 92 million shares in one day closes down 23.8 points, or 2.4%. A year later, the market is down about 14%. The only problem that he had was he was a bear and was destined to stay a bear. And the old saying is, bears make money, bulls make money, and pigs get slaughtered. Well, he stayed at the trough and ended up giving 98% of all that huge amounts of money he gave back in 1981. But he learned a big lesson if you want to be the kind of trader he was. He's passed away this last year. And that is, it's easy to sell fear. And he was always selling it, and it cost his customers dearly. Even when I'm incredibly bearish, I know that the market will bounce, and at that point, maybe I'll reshort it if it does. Maybe I'll go long, especially if some of those things are during options expiration, and make some wicked fast cash out of it. But as bearish as we were down at 1822, was it? 1823, I think, was the low out there, and I was screaming to go long. Wasn't screaming. I think we all saw this coming fairly closely. I'd compared it to the 2000 highs when we came in. Now, if you looked at Qualcomm on January 3rd of 2000, you'll see what we were all looking at here at TFNN at the time. And the thing was just, I think it went from about 200 split adjusted to 134, 133, if I remember right. I think I got out of it about 140. But we came in shorting the daylights out of these markets, and everything looked to me exactly like that we were going to come right back in. We were going to see a lot of people sell. Now, the difference between 2000 and today, the volume has, at least relatively, the volume has been lighter. Everybody and their brother was selling in 2000. Coming back, this is a little bit tougher. And, of course, there was a big difference in 2000. That was a change in the tax rates. If you held to January 1st, you were going to pay 10% less taxes. So you were betting that the market did not go down 10%, or at least your stock did not go down 10% in the first day of trading of 2000. We didn't have that this year, but it still looked to me like a very similar pattern, albeit probably a lighter version. And, of course, if we do go to at least what CNBC was reporting today, this is the most wicked first 3 days ever of a start to a new year. I don't know if that matters as much as anything, but, of course, you've got a few things. A lot of people sold, and they're probably waiting the 30 days for the wash rule. We have options expiration. And probably one of the biggest things is we're going to be seeing the earnings cycle start all over again. And that is on Monday. I think it's Monday after the bell. Alcoa starts the earnings cycle again. These things used to be like 1 month and you'd have 2 months off, and a few stocks out there. But so many new IPOs over the last 2-3 years means we have so many more stocks, and there's always seems like 2 or 3 stocks reporting at night, but maybe a little bit more spread out. And most of the time, the market is much stronger than an individual stock. If you go back 5-10 years, a miss by Microsoft or a miss by Apple would truly affect the entire market. It doesn't seem to be that much more. I mean, it will, but it seems like it's been over for a day, with the Fed always actively involved in pulling the strings, the man behind the curtain. But a little bit of difference in these days. But as always, it's history repeating.
Oh, just a little bit of history repeating.
So anyway, it is interesting. What else do we have? We were along in the daily newsletter, the UVXY, which is the VIX. We bought it at 21.50, and we sold it. My model going into it said that maybe I should expect about 32 for my target. Well, if you go real fast in the VIX, you'll find that the amplitude of the movement can and will be kind of truncated a little bit. Anyway, we saw as it went through $30, I thought we were probably getting very close to probably at least the high of the day. We had a huge move in it, and I want to thank Martin, who's one of my subscribers, for sending this in. Just wanted to thank you for guiding me in my first ever options trade. Bought 10 UVXY calls 7 days ago for $17.40 and just sold them for $8,070. That was awesome. And it was very awesome. Anyway, when we come back, we'll play it awesome. And talk a little bit more about it.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I'm showing on the in Tiger TV right now the newsletter I had on the 19th. But I think I started actually saying this somewhere around the 1st, but I'll go through and find it a little earlier. But since we've been right for most with most of our thinking since September on part of the short squeeze into the end of the year, I suspect we'll be right to assume that we'll see huge selling at the beginning of the years, as I've been thinking. Time to look for the weakest equities in those positions that the whales are going to get out of at the first of the year. But I think there was more thinking. I'm going to have to go back there and look through those. But anyway, back to Martin, who says everything is awesome.
Everything is awesome.
Well, it was awesome for this trade. Not all my trades are perfect. I had one that was a loser today. And I'm going to have to go back and find out why. But it is troubling for me. I can make some absolutely huge wins and still be bummed out that I had a loser. Even if it's just 1 out of 4 trades, it still bothers me. I can always be better. And as I've said before, we can have huge moves and huge wins like we did in the VIX today. And I'll yell and scream about it for about 5 minutes on the show. And then I'll go back because I know the market can make us incredibly humble, incredibly fast. And today I got a little bit of humble pie with a monster win. But basically we had bought the 21, bought the UVYX at 21.50, and I think we bought our 23 calls for what, $2, under $2, and got out probably somewhere around 8 for most of my customers today. So not a bad day out there at all for those folks that take the daily newsletter. But I will get off my soapbox, and I will play for the last time.
Everything is awesome.
And that's it. Other things going on out here. It is a mad, mad, mad market. Let's get into a few charts out here. I wanted to look at some of these that had topped, and I'd been showing these in my daily newsletter. And I guess since I wasn't around last week, really didn't have a lot of time to talk about them. But a lot of these stocks, especially financials, were already starting to show weakness through the end of the year. And what you don't like to see is, especially when you get into light volume into the year, a lot of stocks going up with a very light of any energy, especially when they've come down with heavy energy. And this pattern in AIG, I think, is a very good one to look at for markets that are topping. You come down with heavy energy, and what I'm talking about is the September 19th high to the October 15th low at $48.56. You come back up, you make a run at the high, you kind of get into the high candle from that September 19th high. Not a lot of volume. You needed 14 million shares from that September high. You get into it December 8th, 55.96, 7.5 million shares. Well, you try again, but you get one nice day of energy out here with about 8.5 million shares, and the best you can do up close to the high is about 7.1 million shares. You're challenging a high, not with like 200,000 shares to 100,000 shares, but 14 million to 7 million shares. The energy has kind of pretty much come out of the moves out there. You get a little retrace, more complex pattern, but you go above the high, you close below that high that same day, there's half the volume. You can pretty much plan on seeing a fairly decent retracement in the marketplace. And I probably wouldn't have shorted AIG, but we're going to go through a few of these from last week where I saw there was some issues. I did have in my newsletter last week that I thought that the airline companies, even with the incredibly cheap gas, getting cheaper, looked like they had at least a temporary high. When we looked at Delta Airlines, DAL, this had a nice high on December 12th at $49.62, 15 million shares. We got into that with 8.6 million shares, and I think that's close enough for government work to hit my 50% level. Actually, I look at these. I really want to look at all the stocks every day that have hit previous highs on 40% or less of volume out there. If it's been 10% of the volume, I really want to look at it, whether it's at highs or lows. But that tells me where the outliers are going. Now, one of the other things I thought very interesting was that we had gold stocks without a lot of volume yesterday. Well, they did pop a higher today, and the volume did come in. So sometimes it just takes a little faith. I didn't have any, but I made money just the same. Anyway, we'll be back in a minute. Give me a call at 877-927-6648. We're going to go to John in Philly when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as always, we're going to go to our caller, who's John in Philly, and is an awesome trader himself. How you doing today, John?
Congratulations, David.
Well, thank you very much.
You might recall, just prior to you going on a well-deserved 2-week vacation,
which I was dragged back in before my vacation was over.
I saw that. Shame on you. So you might recall, just prior to you leaving, I spoke with you on your show. That was Friday the 19th, and you had, at that particular time, you were glowing on account of having bought the lows that Wednesday that week, and then seeing the option expiration-related squeeze drive price up and give you some nice profits to go spend on Christmas gifts. And during our conversation,
yeah, that's what we'll say I spent it on.
Exactly. We'll say that, David, yes.
Yeah, we'll say that.
And during that conversation there on the 19th, I asked you if you would describe, besides merely the price volume charts that you were looking at, what was behind your thinking that selling would likely erupt coming into the start of the new year. So you shared your thinking there. The sell-off is frankly in line with what you were describing that very day. So now here we are. And my question for you now is this. I asked you to look at the QQQs, but of course that's just a representation for the NASDAQ 100. And my question is this. Now that we've started the year by selling off as we have, does this activity, does this price action for you give you any indication as to the bigger picture if we were to look at, say, the weekly or the monthly chart on these broad stock indices, what the likely path these will take the next 6 months? Does this action give you any clues to that question?
First, I will say where I differ from most traders, and that is I don't care on weekly and monthlies. I care about an absolute high to an absolute low. So it doesn't matter to me whether it took 2 months or 3 months or 2 weeks for it to go, a stock to go, or in this case the Qs to go from 106 to 99. I care more about the absolute movement. I do factor in time. But to me, it isn't whether it was over a monthly or a weekly chart. I'm more interested in the peaks where people get scared and sell, and where they get greedy and buy. So to me, that is the whole weekly and monthly things, you can have some bad news on a Wednesday. And was that buying or selling pressure on Wednesday? It's hard to tell. If it was on a monthly, was it on the first day of the month or the last day of the month when you saw the high? I get kind of confused in there, and that's one of the reasons why I like my power law vector numbers. And you'll rarely see me go out here and spend a lot of time on weekly and monthly charts, because there's a lot of bars in between all these things. But for me, it is the pretty much trending movement that I'm more interested in the bigger swings out there, whether they're shown on a weekly, daily, or monthly chart.
Got it.
But back to your point out here, I did not like the last 2 days, even though we had the huge movement down, because of the volume. I thought we'd probably see a lot more, especially what we saw in 2000 coming out of it. So I think I'm right on the pattern. I think that we have probably at least temporary low. Of course, options expiration starts again tomorrow, so I'll have a much better idea after probably 2 or 3 o'clock tomorrow afternoon, probably by 8 o'clock tomorrow night when I go through all the data and see what the options are telling me. But I am expecting that we probably go down through March and actually have bought puts on some stuff out into April. So I think this just means it's going to take some time. I was hoping we didn't come in here with a huge amount of volume and it all just burned out, because that's what happened in 2000. The magnitude was huge, but the light that burns twice as bright only burns half as long. And if I'm looking for the kind of long sell-off trend, I think this is probably a little bit better for that scenario. But also means that we could go sideways for a little ways. But with earnings starting on Monday, I suspect that we've got most of the froth off the market, and we're going to start seeing a lot of people talk about the headwinds of the dollar movement, and probably a few people moving their. I bet we're probably going to start seeing earnings announcements every day, where everybody's starting to move their earnings guidance down. And we may have already corrected for all that already. But I think after we get those new numbers and that we don't see a huge fall in the dollar, we're probably going to see basically, you could see, the longest I can see right now is that maybe you could see selling pressure for the next 18 months up and down. But I think we could see 18 months of pressure as long as the dollar stays above 90.
David, thank you for that. Let me tell you, I'm looking at the chart you have posted for the QQQs in the Tiger's Den and Tiger TV. Real specific question. The Qs peaked at 106 near Thanksgiving. It came down, popped up, failed to make a new high, came down again today. So to a low of 99 or 100 in this range. My question to you, in listening to you just speak, do I then surmise correctly you are anticipating 106 is an important top and that a decline to down to 90, that October low and perhaps lower, is in the cards in the foreseeable future? Is that kind of what you're thinking?
I'm thinking there are three gaps. If you're watching on Tiger TV right now or in the den, there are three gaps. One at about 97, one at about 95, and one at about 92. Mm-hmm. And I think all those get filled. So the answer is I think we could bounce back up to about 102.50 on the Qs, on the slight volume, maybe even go sideways. Start seeing again distribution, which I talked about yesterday, which has pretty much been going on, at least in the big hedge funds, since September. And yep. I think we're going to see that this thing maybe gets up to 102, 102.5, and then maybe we start setting up some ABC downs on this. And this may take a lot longer than a lot of people think, and that's why I've gone out in at least some positions all the way out until April. So I think that our first move, if we go back and look at 2000, the market really got trashed early on, kind of bounced back into March and April, where the next leg really took off. I think we're probably going to see a little bit of movement, but we're probably going to see that April time frame, I suspect, is going to be the first meaningful low of the year. So, could we bounce for a little while, maybe into May or something? But my thought is that we could have some fairly serious destruction this year. And
thanks for sharing that opinion, that idea. I appreciate that.
But as far as I can see forward, I'm looking for that 92 gap to get filled on the QQQs.
Understood.
And at that point, I'll try to reevaluate and see. But just the movement in crude, the domino effect. In fact, some people were talking in the den about projects getting canceled with the low price of crude. That means we're going to see people like Caterpillar not selling as much stuff, which is going to ripple on to other people, which is going to ripple on to other people. Why low crude prices and low gas prices are great for the consumer. The consumer seems to be spending those on going out to eat, not buying new Caterpillars or new cars. And
just speaking of oil, I do want to ask you a question about the oil price, but on the subject you just mentioned, let me just share this for you and your listeners. I happen to be knowledgeable of a couple of drilling concerns that are private equity owned, not businesses with publicly traded securities. And just one in particular, I'll share this. Of the rigs that they have operating in North Dakota, the Bakken, they had 5 of them, and the 5 rigs that they have are subcontracted out to sizable oil companies. And in the past 45 days, 3 of those 5 have been shut down, meaning 60%. And the other 2, the guys working on those 2 remaining rigs are, obviously very nervous, and they're saying, "Gosh, will I be going back to work, when my 2-week shift starts in 2 weeks' time?" So there's lots of contraction going on there, that's for sure. So on the oil price, now that oil has broken 48, do you, David White, have any reason to think you have a good target for a bottoming price on that particular item?
On crude?
Mm-hmm.
Now, I'll go into at least a little bit of my theory, but if you Google the fourth quadrant and Nassim Taleb, he's got a pretty good article in there. It's basically saying that statistics are pretty good for about 75% of the time. And the last 25% of the time, everything just goes nuts. It's chaotic, and you really can't tell what things are going to do. And at this point, I'm saying we're definitely in that last 25% of a move that makes absolutely no sense statistically and or by the charts. So just basically there's some times when anything can happen, and I don't have a good feel for when that is. But to me, we're solidly in that in the crude industry, and just the speed and rapidity of the move makes me think that there are going to be a lot of aftershocks in that. But I think you're right. I know that there's a couple of companies that rent mobile homes to a lot of those folks because there's not a lot of infrastructure up there in North Dakota. And a lot of those places have been wheeling out a lot of those mobile homes that they'd rented out to those companies. So I know a lot of those things are probably anecdotally, certainly looks like a lot of those things are getting shut down. One of the things I talked about, I don't know, a few weeks ago with somebody in the den was the amount of flaring that you have to also apply for up there if you're flaring natural gas. And a lot of those, just over the, I think it's on their website, but a lot of those flaring waivers have been taken down, which makes me think that they're not pumping anything. They've just capped the well. So I do hear what you're saying in that with the price drop, a lot of those places to shut down, we're probably going to have a nice little bounce out of here in crude. I just don't know when it is.
Your answers are always clear and concise, David. I appreciate that.
You should catch me after hours when after it's been Miller time or something. My answer's not so quite
glad you used those profits back on December 18th and 19th to buy those good Christmas presents for your loved ones.
That's it. I spent all my money on wine, women, and song, and I squandered the rest.
Thanks for your time, David. Bye now.
You bet. Anyway, that's pretty much it. I don't, I see a lot of these stocks that we've been looking at. Some of these things have hit some highs. Not everything's bad. Lulu, of course, a counter trend to all this. Doesn't look that bad today. It has come up and filled the gap, though. I would have liked to seen light volume yesterday. It had 3.1 million shares going into the previous high that had 3.4 million shares. Of course, this thing gapped down on the 13th of January last year, so almost a year ago, but it came down on 24 million shares. So there are some stocks out here that look fairly interesting. The problem now, though, is you've got all these people that are probably wishing and hoping that they bought at those lows. And I almost bought this thing. I really liked it, but it never got down to $36.26, the June 13th low. If it did, I may have bought it because I really liked this three-gap play down, and then the stock still blew apart. But my guess is that this would be one of the ones that may buck the trend this year, although much harder to do so. But you've got a three-gap play on the way down, which means you got a good chance for this thing to go back and fill all three gaps. And being a fan of yoga pants on finely fit women, I can only pray and hope that it gets back up to 80. What else do we have? We were talking about airline stocks. Love was another one. Almost all these airline stocks had given pretty good signals, which also helped me put together a top in the marketplace and start pulling the string, Tuesday last week and Friday to start going heavily short this market. But when we look at, I got any audio back? I can't hear anything on the other side. Oh, there we go. Anyway, we'll be back in a minute.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bluebird terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at Southwest out here, same kind of thing. You've got to top with half the volume, and even if you don't get the energy on the way down, normally you're going to have some kind of reaction in a market like this. And we pretty much got it. Of course, what are we up at? 12 now on the S&P cash. We pretty much got rid of at least the majority of the run up in this market that was probably overvalued. I think now we're probably going to see a lot of people at a much narrower trading range over the coming months. I don't think we're going to see these kind of 30, 40-point S&P days as many as we do. I think we're going to see the 2 steps back, 1 step forward, maybe 3 steps forward, 5 steps back kind of days. But I think basically everything from probably about mid-October higher on was all a lot of window dressing, and you just it just smacked way too much of trading floors putting lipstick on a pig.
Well, let's put some lipstick on this pig.
And I don't know what else you can say about it, but to me it was just well overdone. I think we're probably a little oversold right now. We've had this bounce. Now we're only off 10 points on the S&P cash, 3.1 billion shares. So we're probably going to go back and test that 1992, the question, today's low, and probably 1822 I'm looking at, and fill all those gaps in the NASDAQ over the next few months. But my guess is that we're more in a secular trend, and that trend is off the top with some decent volume. But I'm not looking for the kind of pullbacks that we've had over the last year, which were, a week or two, and then a rapid purchase back up to the highs. 11 points up off the low or 20 points off the low. Probably going to start running into resistance and people reshorting some of these stocks. So I wouldn't get in too much of a tizzy that the end of the world is nigh. I have a feeling this is more of a trend that's going to take a while to come out and hit. And, of course, I talked about Nassim Taleb's fourth quadrant, which is eventually you leave a zone where statistics basically have no meaning anymore. And, you start seeing the kind of moves in the tests we've had today in, we'll say, like the TLT, with 13 million shares going up against that July 25th high of 2012. We are certainly up here at these highs. Now, was the energy so overwhelming to make me think that this high is going to stick, or that we just had enough people scream and yell in this high? A lot of volume. I would have liked to seen that volume really continue from off the bottom. I think the thing we really need to watch out for in this market for lower prices is a close back below in the TLT, below that July 25th high of 132.22, 6.7 million shares. May not happen, but it's one of the other things that I'm looking at that makes me think that if we get back into that trading range, that we could have a long slide. There may be nowhere to hide in this market. The slow drip, drip, drip of lower prices, and why I'm kind of set up for a lot of longer-term plays than just the VIX trade. I had somebody actually email me. I don't have enough time because he just got his email. Tom is asking about VIX and where I think it's going to pull back. I'll try to get to that question tomorrow. In fact, I'll think a little bit about it and spend some more time. The quick answer is I have a model for it, and basically I trade off my model. That's how we'll get at it. Anyway, catch you tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to, or cover, as I did, when you can, not when you have to. Bye.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.